What's going on, guys? Welcome back to Let It Grow Investing. I'm Jeff. Thank you very much for stopping by. Feel like I haven't been here in forever. Missed a week. Been kind of crazy with work. We definitely got some snow over here on the East Coast. We had three events kind of back to back to back. And yeah, we're caught up for now, but looks like more's coming in over the weekend. So I will be busy again with more snow work, getting all the hours in over there. Taking care of about 30, 32 properties this winter, and we've got a couple more that are just getting added. We're trying to sort those: who's going where, how can we get enough equipment in place, do we have enough salt, is everything working, what did we break, what have we fixed, and what are we going to break again this weekend. That's basically the process of snow removal. It's a work it, break it, fix it, repeat kind of cycle. But yeah, that's probably not why you guys are here, but that's why I missed last week. So yeah, the market has been a little sideways, right? We definitely saw a bit of a pullback here to start off 2025, at least in the S&P and in the NASDAQ, the Dow. The Russell 2000, man, that one is a little bit rougher. I think we entered into correction territory. I'm going to take a look at the IWM right now. I'll get that pulled up and I'll swap back over and show you guys just what I'm looking at over here. And we're going to take a look at the Russell 2000 and we'll see what those small caps are looking like. So when I'm looking at this one, yeah, we're sitting at 225. The high was at 244 back in November. If we're looking over the past year, we peaked out up here. And yeah, now we came back down to, if I go back on the 5-day and we get in some of that volatility, yeah, we were down near 215. So that's more than 10% off the top. So yes, we did get into, we did get into correction territory on the Russell 2000. So that is definitely something that is concerning, right? We saw the Fed come out and say, hey, look, inflation is still hot. We still got some things peaking. And, not everything is really cooled the way that we want it to. You are a nosy thing right now. But yeah, we've got that to be concerned about. We're also looking at the fact that we might not get as many rate cuts as we previously anticipated for 2025 unless these inflation numbers get under control. And so a lot of different things here that we are trying to navigate. I think some of the hands shook out some of those shares in the large caps in the NASDAQ. We're trading out of some of those. We're entering back in. I don't think that there's any major problems there. Going into earnings season, I don't think we're going to have any major meltdowns. So I'm still bullish, at least on the large cap names that are out there. The small cap, man, it's going to be a tougher road, right? We're seeing that with the Russell. We're seeing that as rates stay elevated. The 10 years still elevated as well. And that's going to make it more expensive for buying homes. Yes, we did have some news kick in to start off the year that applications for 30-year mortgages was way up, but I think a lot of that was to do with the fact that we were coming off of a couple weeks where there was holidays, there was snow, there was a lot of different shutdowns that were going on. So coming into the first part of the year, I think some of that was a little bit of built up demand, people looking to get into homes, and they weren't simply applying over those times. So yeah, we've got that. We've got all the different news kicking off with the inauguration. What stocks are going to win? Is crypto going to be favored? Bitcoin is on a run right now. It is, sorry, I actually made a spreadsheet. You guys wouldn't believe it. I did make this spreadsheet. Bitcoin was at 106,239. So we are pushing higher there. Trump is saying that he's going to do some changes on day one that should benefit Bitcoin. So if we take a look at what's a good actual spot ETF that isn't trading futures on Bitcoin, I guess I could just take a look at any of those major ones and kind of come up with something we got here. Bitcoin spot ETF. Yeah, GBTC, that one could work. Grayscale, we could take a look at that one. I was drawing a blank on what was going on over there. So GBTC, we're up about 4.6% today. The high was back in December, but we are trying to retest some of those numbers and just see where this one goes. So yeah, we're watching that. What's MicroStrat doing? Let's take a look there and see if this thing's peaking back out today. Up significantly, 7.3%, up $27, call it. Still off the highs. Not as much euphoria around this rally. It's a little bit quieter, but it's still moving higher. So I'm definitely curious to see what happens with Bitcoin after Inauguration Day, after Trump is back into office, and we see where we go from there. So yeah, again, a lot of different things that are changing for this year. I still think that a lot of the large cap names are going to do really well. I'm a little more skeptical about some of the small cap names. I'm really not too certain where some of these small caps just really end up. So let's see. Can I stop sharing? There we go. So yeah, I'm definitely thinking, what do we want to do for 2025? We've had the Let It Grow, the investing challenge, where we were looking at a different stock every week. That's been working well for 3 years now. We've started that in the beginning of 2022, and that was a very rough year to get going. We continued in 23. We rebounded in 24. We were kind of off to the races, right? Not anything out of this world gains wise, but we're definitely on the path to where our money is working for us versus what 2022 looked like. And it was a bad year for everyone. So that is my crypto. That's not what I want. I wanted to get to the Webull portfolio. So we are looking at, and I did not invest this past week, guys. I missed a week. So we are sitting at 37,639 in this account. We are up 26.5%, up about $7,800. And we are up 1.26% today, $470 gain on the day there. So we have 71 different positions. That gets to be a lot to manage. And I have decided to do something different this year, where there is going to be a list of 12 stocks that I think that we can invest in, have outpaced or outperforming gains for the year, have more growth, but have a lot of stability in this account. And I might go through some of the 71 different positions that we have in Webull and trim them, cut them, delete them all together, and reinvest that money every week into these different 12 or potentially 13 names. There might be a couple more. There's a couple that didn't make the list that I am kind of uncertain whether or not they need to be fit in there or not. So I did 12. That gets us to 48 weeks, but then I had Bitcoin as the outlier, not really an outlier, but as a number 13. So that should get us to one stock or one name a week going forward. And so I do want to go ahead and share this screen, this spreadsheet that I kind of came up with. It's very simple. I'm not a spreadsheet master by any stretch, but this is what I got, guys. These are the 12 plus Bitcoin down there at the bottom. First up, NVIDIA, right? We're looking at NVIDIA. You guys know why. I still think that at 137.91, there's a lot of upside here. Potentially more than this 28.5% that Wall Street has on it for that average price of 176 over here. I'm still thinking all things AI, all things computing. The Blackwell chips, they're rolling out a little bit slower. Some of the different companies that would be buying those are actually slowing their orders or holding their orders because the Blackwell chips have been overheating. I think that's a speed bump. I think it could be another reason to get into this thing before it takes off any further. I still believe that this is going to be the leader in the space, right? I've said that before. I told you guys I'm buying AMD. I'm still buying AMD. It's still on this list. I was really contemplating number 12. Do I throw in two AI chip names or two chip names in general? I decided to go ahead with that. We'll get down there in a second. Tesla. This is actually negative. This was a negative upside. I tried to do the formatting and then it took away some of my percentages here. So we're at 438.10. Target price is 329 according to analysts, but I don't really side with analysts on this one. Sometimes we just don't side with them at all. But man, there's a lot of different things to take into consideration when you're looking at Tesla right now. you've got Elon in a position of, I mean, obviously he's in a position of power anyhow, but if he gets more involved in politics, the regulation front should be easier for them. I did forget to tell you guys, we sold our Tesla Plaid and got into a Rivian truck. So we'll see how that goes. And just really was the size. It wasn't anything wrong with the Tesla, but really was more about having that third row. Didn't really want the Model X and the gull wing doors. So we opted to go Rivian. So yeah, that happened over this past 2 weeks that we spoke as well. We've got a lot of things on full self-driving, a lot of things with all the tech that they're doing, all the robotics, everything that Tesla is outside of just being a car company. I still believe that they have a bright path forward. The price targets on this one are all over. You're going to see some people with a price target of 25, and then you see someone like Kathy Wood that has a price target by 2028 or 29 of $2,800. So we're all over, but I still believe that this thing a lot of times is priced as an automotive maker, and it really shouldn't be. For a lot of the tech that they are building, they're getting a lot of data and they're putting that to use. So Tesla, and these aren't in any real significant order. These aren't all going to be purchased at any given point in time. I'm going to look at this list of 12 throughout the year and say, what are we buying in this given week? I am going to try to average into these 12 or 13 names with Bitcoin over the course of the year. That way we have more outsized positions in stocks that will really have our backing, that we really have done our homework on, and we kind of know where they're going. So that's where I'm at right now. 71 is a lot to manage. It's great for trying to look at new things every week, but this could be a good year to really narrow down and pick stocks rather than just throwing darts. Not that we were necessarily throwing darts, but you get the drift. I mean, it's definitely a case where we were looking everywhere. I didn't really want to repeat a bunch of things. I wanted to throw some more variety into the mix to get people interested. But now this is going to be a case where I am simply looking at these 12. Which one should we buy on this given week and why? Is there something coming up? Are there earnings that we're avoiding? Is it trading too low? Did the valuations come up? What is going on with it that makes us want to buy this given name in this week? Meta, Meta's been on an advertising rampage. The Supreme Court banned or upheld the decision to ban TikTok, which would definitely be a driver for some more growth for Meta. I think if TikTok isn't here, people will go back to Instagram or go back to Facebook and look at the reels, look at the shorts, whatever else that they're looking for on there as far as something to replace TikTok. Not that that has really any bearing on whether or not I'm buying Meta. It has been a great performing stock with or without TikTok, and I don't think that that's going to change. Number 4, Amazon, 11.5%, call it on upside. Again, just a company that is in all areas. They are excelling at a lot of them, and I think they can just pull another lever and keep going, keep growing. And I think that it's a company that we need to continue to add to. That being said, we do have around $3,100 of our portfolio in Webull already in Amazon. So that's roughly 8.5%, 9% of our portfolio is already in Amazon. So I don't want to get too heavy into Amazon. I do want to try to keep it a little bit more balanced. But I know some of these are going to be a larger portion of our portfolio as we continue to add to them individually. Eli Lilly traded down on some different news. They had some different reporting that came out and said their numbers were going to be a little bit lower for the next quarter. So those have actually trended down, but I see that as a buying opportunity. I still think that going forward, all the key metrics and the key numbers that they're looking to get to by the end of 2025 are still in place, although Q4 was going to be a little bit lower than they had anticipated. So at 738 with 38.7% of upside, I think this is probably one of the screaming buys on this list right now. You tell me what you think. They are outperforming Novo, Viking Therapeutics. Which one was going to be buying Viking? Oh boy, I forget who was going to do that. They were going to buy that treatment from them. That is kind of getting backpedaled as I forget if it was Bristol. I don't think it was Bristol. Someone else is buying emergent. No, it was a Chinese company, wasn't it? That was buying another one that they were licensing the deal. I forget. It's been too long. But anyhow, I still think that Eli Lilly has a lot of great things going for him. I think something new with Crohn's treatment. Was it Zepbound for Crohn's? I think that might have been something that just got approved. So there's still more drivers going forward. The GLP-1s are still driving a lot of this business, and they've got a great pipeline going forward. So I still think Eli Lilly, solid stock, hold it for the long term. LHX, L3 Harris, man, more defense, more things in the way of a Trump presidency. I think that we bolster our defense. I think that L3 Harris is a great play to get in there. The other one that I really like right now is Kratos, which is KTOS. I think both of them have a good amount of upside. They are more in that growth area. You know, they're going to be a little bit more nimble than what a Lockheed or a General Dynamics is going to be, and you're going to get more growth out of these names. That's the hope, right? That's why I picked this one. Number 7, Next Era Energy. Trying to navigate a little bit away from tech to utility, but it's got the most growth out of all the utilities that we normally see. So we're sitting at 71. We've got about 20% upside, average price target 85. Yes, you're going to be looking into some of the more renewable energy plays. Might not necessarily bode well with a Trump presidency, but I do think that we're going to be leaning on more and more renewables, whether it be solar, probably more solar than anything. But I know some wind power is still around as well, but those things are less efficient than what solar is as far as I'm concerned. So I think that is probably the way that more goes. But they're also, just going to be an energy company. And I think that is going to continue to be one of the ones with the highest compound annual growth rate, somewhere in the mid-teens. So I'm still definitely looking at that one. CrowdStrike, man, they did have that big blunder, right? We all know about that. The whole world shut down, and anything was working, and all the airlines were down. Everything was down. It was a hiccup. It was a big hiccup. It was a big problem, but I still think that they are one of the best in the industry to do what they're doing as far as security. So it's hard to get away from that one. I don't have any currently, and I think that I want to get back into this one, maybe with a little bit more upside than this. Maybe let this thing come back down to the lower threes, and then we start to nibble at that one. Costco, you guys know Costco. There's not much to say there. This thing's always priced really well, but even having 12% of upside is huge on Costco. So we're there. Palantir. Oh, man, Palantir, yes, they got a little bit of a beat down over the past week. Let me see if I can't go ahead and share that over here. Let's share this tab instead. Let's take a look at PLTR. PLTR, 72.20. And on the 5-day, yeah, we're down at 64. This thing got crushed. But that probably could have been a good time to buy it. I forget if I added a couple shares or not. I might have. And I still think going forward that it is going to be a huge player, although it's a tough valuation to consider right now. So I really like the name. I like it a lot more in the low 60s than I do in this low 70s. But we will try to time our buys to a bit, and we will buy that one when it fits us to do so. That is really what I'm aiming for. Number 11, and I looked at all the banks too. Well, I looked at a couple banks. Bank of America is going to get the nod right now. I think with consumer lending being what it is, I think more and more consumers are going to look to borrow to buy this year. Hopefully these treasuries kind of come back down. 30-year mortgages start to come back down. We get some more news on refis. People are starting to do a little bit more cash out and purchase the things that they want to do, or rehab, rebuild, whatever. And I think that Bank of America could be a huge benefactor of those trends. JP Morgan already came out and said that that's already what's going on. They made a killing. Citi did absolutely just incredible for what they did. Let me see if I can pull up Citi. Let's get back over there. We will share this one. Citi, went from 73, and now we're sitting at 79.81. But if we look, we're at a high. If we look out past last year, we're at 50. That is a huge gain for this stock. And I've been holding it for quite some time. The PE, yes, I mean it's low, but it's a bank, so they normally trade at a lower valuation. I want to say that where was Bank of America on that PE? Let's take a look on the trailing 12 months. They're at a 14.5, and then JP Morgan was at, one of them was in the single digits. I forget which one it was. JP Morgan at 12.8. What else did I look at? I don't think I looked at Goldman. Goldman would probably be in the low teens, or yeah, there we go. I forget. Morgan, I don't know which other one I looked at. One of them was lower. That was my point. Anyhow, Bank of America is the one that I'm looking at right now. Citigroup already had that rally higher. I do believe that Bank of America is trending, kind of in that same range, 43 to 46. That's close enough versus Citi, had that $6 bump as well. So nice chart here on the 1 year for Bank of America. I think that the trend can continue with more lending coming online, more people wanting to borrow. If you're in that younger conglomerate, you're probably spending a lot on credit cards right now, and I think that those people might want to do some different loan options, cash whatever they can out, and maybe they don't really necessarily have the assets to do a cash out refi against their home. But if they can do some other sort of loan to roll it all into one, pay down that credit card, get onto the path to trying to get to home ownership, I think a lot of that comes to play this year. And there are still a lot of people that are, spending on credit card, but they don't have it. Maybe they start doing cash out refis just in order to pay that interest down, which cash out refis, going from a 3% to a 7 makes no sense unless you have to pay down something that's higher interest. So if you're paying down a 22, 25% credit card, bill, 7% sounds a heck of a lot better than paying it at 27%. So yeah, everyone's situation's a little bit different. I think people got a little bit happy spending on those credit cards. And I still think that Bank of America could be, kind of prime for the picking from, from that standpoint as to what happens going forward. Number 12, AMD. Man, I can't get away from this one. I think we're in the beginning innings of what AMD's takeover is. I still think that they are going to be second place to NVIDIA, but they are really at the start of really starting to gear up and starting to make some serious changes and make some serious ripples in the market. So yes, it got down to 115, 112 maybe. I still think that, sorry guys, I forgot to share this one. So AMD at 121, 42% of upside, average price target being 172.24. So for me right now, I want to be looking at Lilly. I want to be looking at AMD. I still think that L3 Harris or NVIDIA could be purchased right now. Just from the standpoint that Trump's coming back into office, I think that the defense spending is going to be looked at closely. I think that some of the spend for defense is going to continue, to go up. NVIDIA, I think that the price isn't where the price needs to be. That is simply where it is with the amount of growth that NVIDIA has. I cannot see how this one does not go higher. Yes, we've got trailing 12 months PE at a 52.6. Let's see if I can't pull up Refinitiv though. And yes, it says neutral. It says neutral, but I'm going to be pretty certain it's a buy. Yep, it's a buy. I don't understand this either. It says neutral there, but then it's a buy from 65 analysts. Probably should have brought some sort of water or something down here. We've got, let's take a look at this revenue increase for the year. Price target about 24.8% higher. We've got nice gains on earnings per share. We're going from 1.29 to 2.95 up to 4.4 by the end of 26. So that is massive on that earnings per share by the year, right? We're going to over double for 25 from what we did in 24. Annual revenue up 112%, which we're also seeing that making it down to earnings, right? The earnings is going to over double. So the earnings is actually going to outpace the annual revenue growth. And then we've got another 111% of gains by the end of 2026. So just massive. I'm right here, guys. I'm looking at this number. So we've got that. Positive on all these past quarters doesn't really necessarily mean much, but strong buy 22, 37 buys, 6 holds, 0 sells of any sort. I can't see why this one shouldn't be purchased. Simply from the fact of where it's going, we're still at a discount on the forward PE, so you might think it's expensive. I mean, price to sales is high, but that's previous looking. We're forward looking, man. This is where it's at. Forward peg is a 0.6. This is our 5-year average on NVIDIA. So you can make all the arguments you want. It is trading well below the 5-year average, almost a third of where it historically trades, much cheaper than the S&P 500. So it's cheap on forward. It's cheap on forward peg. Yes, the price of sales is high. I'm not going to argue that, but you got to look at where this thing's going. And man, the revenue and the earnings doesn't lie. I mean, granted, the projections right now, but they're numbers that they've been posting up the past 6 quarters. Where were we? They all beat. So this isn't like we're throwing out these big numbers and we're not hitting them. They're throwing out these big numbers from previous and they still beat those, right? So I'm still very bullish on NVIDIA. I still think with a little bit of that hiccups with Blackwell, I still think that, people are going to be buying this thing and earnings is going to be strong. So for me right now, I guess it's very much tech looking. I tried to throw in some other names. I tried to throw in some banks, some healthcare. I was looking at United Health. I was looking at Nike. I like both names right now. United is a little bit tricky as to knowing what's going to happen with new administration. Nike, when I'm looking at that one, man, it just seems like it can't move forward. And for that reason, I'm not buying it right yet. I do want to do a little bit of homework here. Let's pull this one up. Let's pull up Refinitiv on Nike. I'm going to try to share this screen. Let's how do we do that? Let's get the screen. Let's share Nike. And sorry, wrong one, guys. Which one was I on? Let me share. Hold on. Technical difficulties here. Share this one instead. So we're at 7107, rated a buy, negative returns over 5 years, but more so over the past year. That's where the lack of gains came from. We've got a stock that has about 23% of upside. I think long-term we're great. What starts to concern me is the fact that we're still going down. We're still going down for 25. We might start trending back up from the lows of 25 into 26, but we're not there yet. Yes, we have some positive news from the past, but going forward, we're getting these annual revenue numbers cut. So I think there will be a time to start buying Nike. Maybe at the end of 2025, I should put that somewhere on my notes that, hey, we should revisit this Q3, Q4, back half of the year. We should take a look. But for right now, it's a tough one for me. Dividend growth is there. These payout ratios, that's safe. I'm not concerned about that. It's really about the revenue and where things are going. So it's not even like we're getting a screaming price on it right now. We're paying more on forward than what we normally do. And you've got revenues and earnings actually coming down. So that isn't necessarily the spot where I want to buy this thing. But I do think it's coming. I think that we're going to get to the point. See, yeah, right here, price to sales, it's low because sales, these numbers are skewed. So kind of the opposite of what we were looking at with NVIDIA. You're off the charts on this PEG ratio, even the fact that it probably doesn't have a positive number there because the growth is not there. But yeah, it was trending at up to a 5, right? And so we're double there. The forward is expensive. So there's no real reason to buy into this one now, as these numbers are trending too high and the growth isn't there in order for us to even have anything to nibble at in the short term. Do I think it comes back? Yes, I do. I do. I can't think that Nike stays down forever. I know they're making different strides. I know there's different problems in China. There's all the problems they had with inventory. But right now, it just doesn't seem like it's one that I want to, really take a swing at. So it's on the radar. It's just not there yet. Looked at other banks. I really wanted to add an oil stock. I opted to keep out of those right now. Just with some of the uncertainty around that, I figured that Next Era Energy might be a better way to go. So I don't know. There might be a couple ones that we change and we throw in here. Maybe we throw in a Chevron, but that's more of a dividend play. That's not as much in the growth area as all these other ones. Bank of America is not going to be a grand slam home run. We might get a single or a double there. That might do okay. The other ones, Amazon, Meta, they could definitely be doubles, but I don't think that they're going to be slam dunks or home runs, or I guess I should keep it with the baseball theme. I don't think they're going to be going grand slams, but I think that they're going to be consistent outperformers going forward. So I guess that's what I'm looking at right now, guys. I don't really want to take a lot of big swings at some of the small caps. I don't necessarily want to chase the IWM. Do I think that we have the time to get there? Probably. I think it could be back half of the year. Maybe we start to take a nibble there if we get different inflation reads, if we get different metrics that the Fed is talking about, if we get some different, kind of guidance from some of these companies, or what we're seeing on spending. I think we could definitely, kind of reevaluate that when it gets here, but we're not there yet. So for me, I guess this is my list for 2025, at least for here, for right now. That's what I'm looking at. I think this is a very safe space to start, and it should give us some names that we should be comfortable adding and holding, at least at the right time. Am I rushing out to buy Tesla right now? No, I'm not. I'm certainly not. But back when it was at 385, I was looking to buy, right? And that was like 2 weeks ago. So I am certainly a buyer of these names at the right price. Palantir, again, I like it in the lower 60s. But all these other ones, man, I think that you can probably average into, or I can probably average into. You do what you want to do and do your own homework. This is kind of my little cheat sheet here for the podcast, and maybe a different way to take it this year rather than trying to have 100 names in this portfolio, because it just gets to be too much to even remember what is even in there. And I don't have enough time to look at 71 names every week and try to tell you guys what's going on. So this is a good spot to start. And we're going to try something different. So with that being said, I'm going to go ahead and add $200 worth of Eli Lilly right now. It is 117, or the 17th of January. If you guys get this one, it's probably going to be Monday, which is going to be the 20th. I think the market's going to be closed for Martin Luther King Jr. Day. So I'm going to buy it now. We will probably be adding it on the 21st. If you're just getting it, if you're following along, that's what I'm going to be doing. And I guess if you guys want to follow along, feel free to do so. So that's what I got. Thank you guys very much for stopping by. If you need any help from me, feel free to reach out. If you've got a portfolio you're looking to start, I got links for Webull, E-Trade, Binance, Crypto.com. Those are all there. I guess I could push some of the other stuff that I do, but those links are in the description as well. Be safe out there and stay warm. It's going to be a cold one next week, and I will be out there trying to keep these roads clear. And that's all I got. Thanks for stopping by, and I'll catch you guys in the next one. Take care.